Look at what's happening with XRP right now. We've just seen the largest spike in on-chain realized losses since 2022. According to Sentiment data, XRP holders locked in about $1.93 billion in losses over 1 week, the highest level in 39 months and a repeat of a 3-year peak. Back then, after a similar loss spike, XRP surged roughly 114% over the next 8 months. This is classic capitulation. Weak hands cash out at a loss, and the market overshoots emotionally. XRP's price has now slid to a major support zone around $1.30, $1.40 after a sharp pullback from 2025 highs. Many are staring at the chart thinking, trends broken, time to bail. But let's break it down calmly. Where we stand technically, what on-chain data shows, and crucially, XRPL's fundamental drivers for 2026. Start with the on-chain picture. It's screaming the loudest signal right now. Realized losses aren't paper losses. They're actual hits recorded on the blockchain when holders sell below their buy-in price. Sentiment clocked XRP's weekly peak at $1.93 billion, the biggest surge since late 2022. On the chart, it's a massive vertical spike down in realized P&L metrics. This scale means mass surrender from folks who entered higher. Psychologically, it's pivotal. When most crack under pressure, a local or even midterm bottom often forms nearby. History backs it. Last time XRP hit 1.93B weekly losses, it rallied 114% in 8 months. No repeat guarantee, but the cycle mirrors. Accumulation, overheating, painful purge, then recovery. Key point: such loss spikes flush excess seller pressure. Fearful holders exit, leaving patient ones and fresh buyers at lower prices. This sets up bases for upside if new demand kicks in. Now the chart itself and our current hot zone. Post-2025 bullrun highs, XRP entered post-blow-off unwind, shedding froth back to sane supports. We've tested intermediates. Now we're at a true key range. Critical support? 140, 160. Multiple factors converge. Prior local highs, ish consolidations, high-volume nodes, repeated bounce origins. Not random. Buyers have defended here historically. XRP's probing the lower edge. Wider view? Potential triple bottom forming. We've bounced twice from similar zones. A third hold draws the pattern. Stronger reversal signal than double bottom. Buyers defend thrice. Think concrete floor. Price hit it twice and rebounded. Third test. Traders yell, solid support, long aggressively. Layer positive fundamentals and bounce explodes. Quick, no BS scenarios. Bullish, neutral, bearish. Bullish. 130, 140 holds. Loss spike, one true capitulation. Weekly higher lows, volume builds, breaks, 160, 180. Triple bottom confirms, impulses up on 2026 news. Neutral. Sideways grind around here, maybe fake dip to 120 to 130, then reclaim. Prolonged accumulation. Whales load for XRPL triggers like RWA launches. Bearish. 140, 130 breaks on volume, deeper to structural lows. No triple bottom, instead expanding range or descending channel. Losses still signal eventual base, just lower, longer. Technical analysis is only half the picture. The other half is the evolution of XRP ledger itself and how it's positioning for institutional finance. Ripple's updated XRPL roadmap is heavily focused on institutional needs: lending, privacy, and strict compliance. The idea is to transform XRPL from just a fast payments chain into full-blown infrastructure for regulated DeFi, stablecoins, FX pairs, and tokenized real-world assets. A big part of that strategy is permissioned infrastructure, things like permissioned domains, permissioned DEX environments, and on-chain identity tools that can plug directly into KYC and accreditation workflows. For crypto purists, this might sound like a step towards centralization, but for banks, asset managers, and regulated institutions, it's exactly what they need to participate. The permissioned DEX concept is especially important. We're talking about secondary markets tailored for stablecoins, FX, and tokenized securities, where every participant is verified and issuers can meet regulatory standards for who can access their assets. This turns XRPL into a bridge where traditional finance can get DeFi-like benefits while still ticking compliance boxes. Identity verification and KYC are central to this. Major institutions won't touch a DEX if they risk mixing with sanctioned addresses or illicit flows. XRPL's approach is to keep the base layer public and open, but layer permissioned zones on top where access is restricted to verified entities, powered by tools like on-chain credentials and deep freeze controls for flagged accounts. RWA tokenization catalysts in 2026. Now to the part that could drive a completely new demand wave: tokenization of real-world assets. By early 2026, XRPL is already hosting an estimated $500 million in tokenized assets, including treasuries, bonds, liquidity pools, and enterprise-grade stablecoins like RLUSD, which itself has crossed around $1.3 billion in market cap across chains according to market reports. Industry analysis suggests that, with current momentum and regulatory clarity after the 2025 SEC resolution on XRP, XRPL could realistically host $2 to $3 billion in tokenized RWAs by mid to late 2026 if institutional issuance ramps as planned. The roadmap for 2026 includes not just more token issuance, but also deeper secondary markets for these assets on permissioned DEX environments. That means tokenized bonds, real estate funds, and even ESG-oriented products like carbon credits could trade in a compliant, on-chain setting where settlement is near instant and operational friction is dramatically lower than in legacy systems. In that context, XRP isn't just a speculative coin, it becomes a key piece of the plumbing. It can act as a bridge asset for moving value between different RWAs and currencies, serve as collateral and liquidity in institutional pools, and function as a macro bet on the growth of the overall XRPL economy. How institutional tools change XRP's risk-reward. Let's add a practical angle. What do institutional upgrades and RWA tokenization actually mean for XRP's risk-reward profile? First, regulatory clarity and compliance-ready tooling reduce one of the biggest historical risks for XRP: legal uncertainty. With the August 2025 SEC resolution treating XRP as a utility token and the rollout of KYC-friendly infrastructure, much of the "will regulators kill it" overhang has been lifted for large players. That doesn't erase volatility, but it changes the nature of the risk from existential to market-driven. Second, as more RWAs come on-chain and as permissioned DEX venues start to host meaningful volumes, XRP can benefit from utility-driven demand rather than purely speculative cycles. Every additional billion in tokenized assets and every new institutional use case creates more reasons to hold and use XRP as a bridge and liquidity asset, even if the spot price is choppy in the short term. Third, from a portfolio standpoint, combining extreme on-chain capitulation, like the current $1.93 billion loss spike, with a strengthening long-term fundamental story can create asymmetric setups. downside is constrained by exhausted sellers and structural supports, while upside is tied to adoption curves that can play out over several years. This is not a guarantee of profits, but it is a very different proposition from buying a token that has no clear real-world path or institutional roadmap. Finally, these institutional tools also introduce new types of risk: concentration of power in permissioned domains, potential misuse of freeze or credential systems, and tighter tracking of capital flows. For some investors, this is a trade-off worth making to attract regulated capital. For others, it's a philosophical compromise. Either way, it's part of XRP's evolving identity. Now let's translate all of this into a simple investor playbook for the next 12 to 24 months. One approach is the DCA plus level-based strategy. In this model, an investor gradually accumulates XRP when it trades near identified structural supports, like the 130-140 region now, while leaving room to buy deeper dips if the bearish scenario plays out. Position sizes are kept small enough that even a move toward lower supports doesn't trigger forced selling, and the thesis is anchored to 2026-2027 catalysts such as RWA growth, institutional lending features, and privacy-preserving collateral tools. Another approach is the event-driven swing strategy. Here, instead of holding through all volatility, a trader focuses on key news windows, like major XRPL upgrades, big RWA listings, or regulatory announcements, and looks for confirmation on the chart before entering. For example, a clean reclaim of the 1.60-1.80 resistance band on strong volume after a bullish XRPL update could be treated as a signal to ride a swing toward higher targets, while tight stops are placed below recently reclaimed levels. A more conservative option is the wait-and-see stance. In this case, an investor acknowledges the attractive long-term narrative but prefers to see either 1. A clear technical structure of higher highs and higher lows after the current capitulation, or 2. Evidence that XRPL's tokenized asset base has grown substantially from the current $500 million toward the $2 to $3 billion range projected by analysts. This reduces the risk of catching a falling knife, but may mean entering at higher prices in exchange for more confirmation. Whichever approach someone chooses, 3 principles remain crucial: position sizing that respects volatility, clear invalidation points where the thesis is considered broken, and an honest alignment between investment horizon and the actual pace at which infrastructure and institutional adoption tend to roll out. XRPL's roadmap is not a one-week story. It's a multi-year build-out where the biggest rewards typically go to those who can think at least one full cycle ahead. Putting it all together. So the picture right now looks like this: a brutal on-chain washout with $1.93 billion in realized losses, the worst since the FTX collapse era, testing a multi-year support band that could evolve into a triple bottom, while XRPL doubles down on institutional tools, privacy tech, and real-world tokenization heading into 2026. For some, that combination is terrifying. For others, it's exactly the kind of environment where long-term positions are quietly built. Whether you treat this as a generational opportunity or just another volatile chapter depends on your risk tolerance, your time horizon, and how much conviction you have in XRP's institutional and RWA roadmap. Not financial advice. Let me know in the comments how you're playing this: buying the dip, waiting for deeper levels, or watching from the sidelines. We'll keep tracking the on-chain metrics, the chart structure, and every major XRPL milestone, especially identity-verified DEX activity and the next wave of real-world asset tokenization as 2026 unfolds.